I wanted to show you here is the supply of above ground gold stocks, and you can see that it's gone from 20,000 metric tons in 1835 to the current level. Well, this was up to 2015, but now we're almost up to 200,000 tons. So what I'm trying to say is that there will always be enough gold. And why is that? Well, because gold is money, and the reason it's been money for thousands of years is that historically, through technological advances and through population growth, yes, the gold industry is always able to grow the supply of gold, above ground gold, by 2% a year or so.
There is no denying that gold is firmly on track to close 2024 with one of its best yearly performances ever seen, with predictions indicating that gold could peak at $2,700 and $3,000 per ounce in 2025. Remaining attentive to various factors will be critical for anyone looking to invest in this timeless asset. Gold has an inherent quality of giving surprises. Hence, gold must be projected and not predicted. Financial markets and macroeconomics analyst Mario Innecco debunked the myth that there isn't enough gold for a gold standard, citing data showing above-ground gold stocks have grown from 20,000 metric tons in 1835 to nearly 200,000 today. He emphasizes gold's stable 2% annual supply growth, making it a reliable form of money with consistent purchasing power. The supply of gold has shown consistent growth, with mine output increasing 5.8% year-over-year in the third quarter. This rise was particularly significant in North America, where production in Canada and Mexico surged due to newly operational mining projects and a favorable comparison base from last year. Based on his observation, Mario dismisses John Maynard Keynes's claims that the gold standard was a gold cage, arguing its suspension protected financial systems burdened by unbacked loans. He blames government and banker influence, highlighting the lack of public awareness at the time. The gold standard hasn't been used in the U.S. since the 1970s, but when Donald Trump was president from 2017 to 2021, there was speculation that he could bring it back. Now that Trump has won the 2024 U.S. presidential election, some are again wondering if he will return the country to the gold standard after he takes office in January 2025. From a technical perspective, Mario mentions that the UK remains under a gold standard because the sovereign is still considered legal tender, valued at £1. Now we present the clips of Mario Innecco's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
What is a gold standard? Well, here's a coin of the gold. This is the gold standard here for the UK. And the reason why the gold standard was suspended is because technically we're still under a gold standard, yes. If you Google gold sovereign and you go onto Wikipedia, you will find that the gold sovereign is still £1 and that it's legal tender, it's £1. So what is the standard? Well, it's the sovereign, or more exactly, about 7.33 grams of pure gold. But Professor Keynes, it says here, famous economic expert, predicts great future for Britain as a result of gold standard suspension. And I'm going to play this clip in a minute. But another fallacy I wanted to talk about is the talk that there's not enough gold out there for us to be on a gold standard. So I thought it'd be good to bring this chart here from this website, omfif.org, the 7 ages of gold. They have an article here, how central banks' gold policies have fluctuated over 2 centuries. But what I wanted to show you here is the supply of above ground gold stocks. And you can see that it's gone from 20,000 metric tons in 1835 to the current level. Well, this was up to 2015, but now we're almost up to 200,000 tons. So what I'm trying to say is that there will always be enough gold. And why is that? Well, because gold is money, and the reason it's been money for thousands of years is that historically, through technological advances and through population growth, yes, the gold industry is always able to grow the supply of gold, above ground gold, by 2% a year or so. And there's probably going to be an argument as well. Well, from the Bitcoin people, for example, there's too much gold. You can always find gold. Yes, and that's why it's money, because you can't run out of money. But the beauty of gold and its growth and supply is that it's been very stable vis-a-vis other goods and services in the economy, and that's why its purchasing power has remained so steady and stable throughout the millennia, and that's why it's money. As you can see here, if we go back to 1930, all the gold in the world was about, well, not all the gold in the world, but central bank gold reserves were at 50,000. And I'm sure back then, a lot of people who wanted to suspend the gold standard were saying, well, there's not enough gold. And now people still say, well, they had to leave because there was not enough gold. And you hear what Lord Keynes says, or John Maynard Keynes, or Professor Keynes says. And he says, oh, we were trapped in this gold cage. But no, my argument that we were not trapped, but we were floating on a sea of fraudulent, unbacked loans. And Mr. Keynes and the UK government, under the control probably of the bankers, well, not probably, control of the bankers, they said, you can't let us collapse. you got to suspend this and put us off the gold standard. And unfortunately, people went along with it. We didn't have social media back then, or the internet to warn people.
Expectations of and the initiation of the Fed's rate-cutting cycle are the most obvious catalyst for the rise in bullion prices this year, and have provided the impetus for gold recording 36 new all-time highs as of the end of last week. Looking beyond the dollar, gold has been rising faster in a number of other major currencies. In yuan, euro, and rupee terms, gold is up more than 30% year-to-date. This has resulted in some softening in consumer gold demand in price-sensitive markets such as China and India. In broader markets, Mario Innecco comments on the market downturn, noting spot gold at $2,630 and silver at $30.20, both declining. He expressed no concern, emphasizing that continued inflation or a systemic collapse would eventually elevate gold and silver's value. Gold and silver finished last week's trading on level pegging in year-to-date gains. Despite outperforming for most of the year, silver has slipped more than gold in recent weeks, meaning gold is the best-performing precious metal in 2024. Let's get back to the interview.
We've got spot gold at $26.30. It's down about $20. Silver is down as well, about 42 cents at $30.20. Am I concerned? No, because there's no way out. They have to either keep inflating, or they have to let the whole system implode. If they keep inflating, one of these is going to become worth a lot more of these, just like it has in the last 22 years or so. If they let it all collapse, these are going to be worthless as well, because they're not going to be able to, no one's going to have access to them, because all the loans are going to be wiped out. The only thing that will be worth something for payment is this, and silver, of course, as well. So the rest of the market is fairly quiet here. The stock market indices, the currencies are a little weaker versus the dollar. We got sterling down 1/3%. We got the euro actually down 3/4%.